Most traders fail for one reason and one reason only. They have absolutely no clue what their daily bias is. They wake up, they open their charts, and they just start reacting to random candles, thinking that they're gonna catch a winning trade. No narrative, no direction, no plan whatsoever. How can you expect results if you have no idea where price is even trying to draw towards? You're already approaching the market in a completely wrong way and a terrible mindset. Inside of this video today, I'm gonna be showing you exactly how I build my daily bias step by step using ICT Concepts. So you guys can finally start trading with conviction and actually know what the drawn liquidity is for that trading day. So by the end of today's video, you should be a lot less confused and you'll be actually able to figure out what your daily bias is for that trading day. So other than that, guys, let's jump straight into the video. All right, so starting off, guys, daily bias, ICT Concepts. We're using ICT Concepts to build a high conviction bias every single trading session. So first things first, what even is a daily bias in the first place? For the absolute beginner person coming into this who has absolutely no clue what even a daily bias is, right? So it's a directional framework for that specific trading day, bullish, bearish, or neutral. It's not a prediction, it's an actual framework that allows you to look at price from a different lens and have a really good idea of where the market is likely to draw to next based on logic, okay, not emotion. So having a daily bias helps you filter out the noise and stay laser focused on high probability setups. So what it is in short, is pretty much just a framework. So the way I like to look at it is you're not going into the market blind, you're coming in with an actual framework which gives you a better idea and understanding of where the market is likely to draw to next, rather than just coming in and guessing where price is going to draw to. So with this approach, you actually have a plan and you feel more prepared when you're trading. All right, guys, apologies for interrupting the video here. I've got some big news. I've opened up a few seats for the one-on-one mentorship program. I'm only looking to take on a few serious individuals to work with me one-on-one, actual private calls where you have direct access to me. So you'll be working with me one-on-one, or we break down literally everything, build a personalized plan specifically tailored towards your current trading struggles. We'll see what you're doing right, we'll see what you're doing wrong, and figure out where we can improve in order to get you to that next level. So you actually start seeing results like getting funded and getting your first ever payout. So yeah, if you are someone that's interested and you're looking for a mentor to actually guide you literally every single step of the way, make sure to fill out the application form in the description below. It takes less than 30 seconds. We'll see if you're the right fit for the mentorship. If you do get approved, we'll speak shortly. But yeah, other than that, guys, let's get back to the video. All right, so we're gonna be jumping straight into this. I'm about to make the face cam a little bit smaller, as you can see, because it's covering the writing. So option one, using fair value gaps. Okay, so there is two options on how to determine daily bias, which we will go over shortly, the second one. But let's start off with the first one. That's going to be using fair value gaps or imbalances or inefficiencies. All right, whatever you want to call them. At the end of the day, it's a fair value gap. Okay, so what I like to do starting out is start on the daily time frame. So look out for any fair value gaps or inefficiencies, preferably on the higher time frame, such as the daily. Make sure to mark these out on your chart. These will give you a clear daily bias and framework to use for that trading day. Now, I like to use the daily, the 4 hour, and then the lowest I'll go is the 1 hour. So if there's no fair value gaps on the daily, I'll jump down into the 4 hour. If there's no gaps on the 4 hour, I'll jump down into the 1 hour. I don't like to go below that time frame. So if price decides to trade inside of a bullish fair value gap, you're going to be leaning bullish, meaning your bias is going to be bullish. If price trades into a bearish fair value gap, you're going to be leaning bearish, meaning you have a bearish bias. Fair value gaps give structure and context. Without them, bias is going to be a lot weaker. So if there's no fair value gap on that time frame, for example, the daily, the 4 hour, or the 1 hour, actually determining a daily bias for that day is going to be a lot more trickier compared to if there is an imbalance. So whenever there's an imbalance on the higher time frame, it's a lot more easier to have a clear directional bias. So I'll give you a quick example here. If we're inside of a bullish fair value gap, right, and we have relatively equal highs resting just above us, most likely, guys, okay, 9 times out of 10, price will draw towards those equal highs and it will respect that bullish fair value gap. Hence, your bias is going to be bullish. Now, of course, in trading, anything can happen. I'm not saying that bias, right, you're going to get correct 100% of the time, because you're not. Sometimes, some days, you're going to get the bias wrong, and that's completely fine. Right, that's trading. And even if you do get it right and price doesn't play out the way you wanted it to, you can't be mad about that, because no single strategy is 100% win rate, right? So it may work out for you 8 or 9 times out of 10, but that one time it might fail. So don't get too frustrated, right? You will eventually get it correct. It's just a probabilities game. So lastly, liquidity. Combining this with liquidity works amazing, right? So again, very Good example here, if we're inside of a bullish fair value gap with clean equal highs resting above, on the daily time frame, your buy should be clearly bullish. If anyone disagrees with that, make sure to leave your comments in the comment section down below explaining why, but you should not be disagreeing with that, guys. Okay, if we're inside of a bullish gap with equal highs resting above, your bias is going to be bullish 1000%. If it isn't, I'd be highly concerned why you think that way, and you have some work to do. But yeah, that's option one, guys. So determining daily bias, look out for fair value gaps on the daily time frame preferably, okay? If there's no fair value gaps on the daily, go down to the 4 hour, go down to the 1 hour, okay? Find some sort of fair value gap that you can build and base your trade off of. Now, option number two, using daily candle closure. So let's say the worst case scenario, right? There's no fair value gaps on the daily, there's no fair value gaps on the 4 hour, and there's no fair value gaps on the 1 hour, okay? There's absolutely no inefficiencies. What do you do in this scenario, right? You're gonna use the daily candle as your daily bias and draw on liquidity. So this works for the daily time frame only. You can't use the 4 hour, you can't use the 1 hour. Stick to the daily time frame. So you're looking at the daily candle. Now, if it has a strong bullish closure, meaning the candle has actually closed bullish, your target is likely going to be that next swing high. In this scenario, your daily bias is going to be bullish and you want to target that next high, okay? If we have a strong bearish closure on the daily candle, the next target is likely going to be that swing low. Now, I actually forgot to add here, let's say price doesn't close bullish or it doesn't close bearish, right? Let's say we have just a very neutral candle, right? So it's not strong bullish and it's not strong bearish, it's just in the middle, very wicky candle. In that case, your bias is going to be neutral, right? Because there's no clear direction in the market. And whenever your bias is neutral, most likely you want to stay out of the market. The way I like to approach neutral bias days is I go down into the 15-minute time frame and I wait for session liquidity sweeps. So if we sweep London highs, for example, and then we get a clear displacement lower and we get a bearish setup to go short to target equal lows, for example, because I am neutral, I'm open to both directions. So I'm open to both longs and I'm open to both shorts. Only in that scenario, I will take shorts. But most of the time, guys, when I have a neutral bias, I'm usually not trading and I'll just skip that day unless we get a very, very clean A+ setup. This works best with supporting fair value gaps or inefficiencies, okay? If there's no imbalance present, the candle closures alone are less likely to play out, guys, okay? They're less reliable. Yes, they still work, but your bias is not gonna be as strong as it would be if you had an imbalance paired with that. So yeah, those are the two scenarios that I use: the candle closure on the daily time frame and then fair value gaps on the daily, the 4 hour and the 1 hour. That's really all that comes down to it with daily bias. Now, moving on to my next point, draw on liquidity plays a massive part with your daily bias also. I've listed out some key points that can act as a magnet on price and a draw on liquidity. So this will help you determine and build a framework around your daily bias, right? So if we have relatively equal highs or relatively equal lows, these are very strong liquidity magnets, right? Meaning that price wants to draw towards them. And most likely, guys, whenever we see these equal highs and lows, price doesn't stay like that for a long time, okay? Usually those highs or lows are getting taken out very, very quickly. So when you do see them, please take advantage of them whilst they last, okay? Because they won't be like that for a long time. New week opening gap is a very good one as well. So any unfilled new week opening gaps can act as a very strong draw on liquidity. If left open, price will usually seek to fill them, all right? And that can help you frame your daily bias. So let's say, for example, we've just opened the week. We have a very clear new week opening gap. If you don't really know what it is, all it is, guys, is a difference between Friday's close and Sunday's open. So when we close on Friday, on Sunday, when we open, usually what the market does, it will either open higher or open lower, and a gap will be created, which we call the new week opening gap. So these are little points where the market has to come back to in order to rebalance that inefficiency. That's just the way the market moves, and it has to come back. So we don't know when, but eventually price does draw towards that and act as a magnet. So if we've opened higher on a Sunday and we have that new week opening gap from Friday's closure, let's say we're very high up in price, I would be looking for shorts. So even better, right, if the daily has a bearish fair value gap, we're inside of that and we have a new week opening gap resting just below, my bias is going to be bearish, very strong bias. Okay, you have two factors there. You have the inefficiency on the higher time frame that's supporting your bias and framework, and you also have a new week opening gap as your draw on liquidity. That's how you want to use it, guys. You want to have a clear draw on liquidity and a clear bias to build that framework. Premium and discount, this is very obvious, guys, right? Price seeks balance. So if we're inside of a premium, we don't want to draw to a discount. Same if we're inside of a discount, we want to draw to a premium. Now, this works very well if it's paired with an unfilled fair value gap. So for example, let's say we have a unfilled inefficiency resting in a discount and we're inside of a premium, right? If you're going short, that's a good area to target. Same exact thing if flipped around, right? If we have a unfilled fair value gap sitting inside of a premium and we're going long inside of a discount, again, that's a very good area to target as your draw on liquidity. Now, lastly, is going to be session liquidity. So session highs and lows, for example, London lows, London highs, Asia, New York, these levels often get raided. So usually, guys, these liquidity levels are very strong draws on liquidity that you can target. But yeah, that is the key, guys, okay? You want to find either a fair value gap on the daily time frame, on the 4 hour, on the 1 hour. If there's no fair value gaps that you can see, then you refer to the candle closure. Figure out if price has closed bullish or closed bearish. If it's closed neutral, then again, of course, you're gonna come into that and you're gonna approach price with a neutral bias. Don't expect too much. But let's say if we're bullish, for example, now you wanna pair that bias with a very strong drawn liquidity. So let's say we have a new week opening gap resting above us. Amazing. Okay, that's gonna be your framework for that trading day. But yeah, guys, that is pretty much it for the PowerPoint. Now, we're gonna actually jump into some live trading examples on TradingView and show you this in real time so you guys can actually get a better understanding of how this works and how I use it in my day-to-day trading. So let's jump straight into it. All right, so starting off, guys, as you can see, we are on the daily time frame. So what am I looking for? I'm looking for an inefficiency or a fair value gap to base a trade off of, okay? So as you can see here, we're inside of a daily bearish fair value gap. What is going to be my bias going into that trading day? All right, I'm expecting for price to tap into this gap and then target the next swing low. The next swing low is going to be your draw on liquidity. This candle here is, of course, your previous daily low. That's going to act as your draw on liquidity. So let's quickly see what would actually happen if we were to base a trade off of this. Right, as you can see, very lovely stuff. Okay, we tap in. We respect that bearish daily fair value gap. And where do we head to next, guys? We head to that swing low, which is the draw on liquidity. Amazing stuff. So that's a very good example of using the fair value gaps, right? That's scenario number one. Now, this happens a lot, guys, as you can see again. Okay, we tapped into a bearish daily fair value gap. Now, this candle here, right, you would have been a bearish bias on that day and it would have not played out for you. Right, and that's fine, that's trading for you. It's not gonna play out every single time, but the next day, okay, you come in again with a bearish bias, and this time it actually plays out for you, right? And it goes towards that next swing low on the daily time frame. Sometimes it's not gonna play out straight away. The daily time frame is a very large time frame, and it may take a little bit of time for price to actually play out, but it will play out, guys, right? Just have some faith. Now, another thing that I forgot to mention is what happens, right, if price decides to inverse these gaps. So let's say you come into this day, okay, with a bearish bias. Now, a lot can come into play, guys. So if we've just swept sell-side liquidity on the daily time frame and we're tapping into a daily bearish fair value gap, yes, we might respect that and head to the next low, but it's also very unlikely, right? Because if we already swept a liquidity level, there's no reason for price to keep heading lower. Hence, we're expecting a bullish or opposing direction move. Now, again, on the daily time frame, this takes a lot of time. So you should always be bearish bias no matter what. If we're inside of a daily bearish fair value gap, you wanna have your bias to be bearish, okay? Once price actually shows you on the daily time frame that it wants to start displacing higher and go in the opposing direction, only then do you switch your bias. So in this case here, right, the daily time frame, going back to option number 2, which is using the candle closures. This right here, right, is a very strong bullish candle closure. We can see that, right? We've closed next to the high of that daily candle, right? And we've also inversed the bearish fair value gaps. So you can use the candle closures paired with an inverse. So going into the next day, once we've had a bullish candle closure and we've inversed these two gaps here, which were bearish, your bias is going to be bullish. Okay, so those are the two scenarios that you can use, guys, and they work very well. As you can see here, it did take quite a while to actually play out. But again, guys, that is the case with trading, okay? It's not always gonna play out the same day. It really isn't. That's why you have to adapt. Sometimes you have to change your bias. There's a lot of things that actually go into it. It's not always as easy as, okay, we're bullish bias, We enter long, boom, that's it, right? We've hit TP. Sometimes it may take some time to get there, right? Some days you might have to switch your bias very quickly. You have to adapt to the market. There's a lot of different factors that go into this. Obviously for you guys, I'm trying my best to explain it in the most simplest and best way I can and give you an actual framework that you can use when you're next trading. But as you can see here, it did actually end up playing out in the end. So another example here, right? Price comes down, taps into these two bullish fair value gaps. Your bias is gonna be bullish. Takes a little bit of time. We target the next swing high, right? The next swing high or buy side level is gonna be this level here. Now, as you can see here, these are actually relatively equal highs. So even better, doesn't act as a strong magnet, and boom, price takes out those equal highs, right? Another great example here, guys. We're inside of a daily bullish fair value gap. We came down, we respected these. We had a strong reaction out of there, strong bullish candle closure. Again, price created a fair value gap. Price comes in, you have a bullish bias. You target the next swing high, which is this one, right? What happens next? Boom, TP smashed, okay? And guys, we're looking at the daily time frame. So keep in mind, right, this candle here, it may look small. However, when you're trading the 1 minute chart and you align the lower time frame with the higher time frame, meaning you find a bullish setup on the 1 minute time frame, such as the silver bullet or the unicorn model. I'm not gonna be going over that in today's video because we're simply just focusing on daily bias. You can watch some of my other videos that explain that in depth. You find your model on the lower time frame and you pair it with the higher time frame bias. That's going to be a very big move on the lower time frame that you can make a lot of money with. Don't look at this and think, oh, I'm not catching the whole move because this took, 4 days to play out. Don't worry, guys. On the lower time frame, trust me, you're catching a move. It may not look big on the daily time frame because it's such a high time frame. Whereas on the 1 minute, this one daily candle is a whole daily price range that you can catch 100 handles with, right? If we look at this candle here, we opened at 530 and we closed at 750. So that's over 200 handles. Now, looking at this candle here, does it look like 200 handles? It does not look like 200 handles at all, right? But if you actually zoom into the 1 minute time frame, it's a lot of handles, guys. So keep that in mind. But yeah, guys, that is pretty much going to be it for today's video, right? This has been a highly requested topic. A lot of people asking me, Ben, please do a video on daily bias. We need to know how you figure out your daily bias. So I always do the silver bullets, the unicorn model strategy videos and entry models because that's what people love to see and they love to learn. But daily bias is very important also. So I decided to make this video for you lot. Hopefully it's helped you out. And hopefully you can actually interpret this and start using it in your day-to-day trading. If it has helped you and you've found value inside of this video, please leave a like, leave a comment, share and subscribe. And lastly, guys, if you're actually serious about getting your trading to the next level and not just watching videos, but getting real results, then make sure to fill out the application form in the description below. It's a one-on-one mentorship where you have direct access to me. Private calls will break down literally everything, exact same topics like this that you've just seen in today's video, but more tailored and personalized towards your current struggles that you're facing in trading right now. We'll see what you're doing wrong, what you're doing right, where we can improve, and pretty much just guide you every step of the way, which I wish I had when I first started out trading. If you are someone that's interested, make sure to apply below. If you are the right fit for the mentorship, you will get approved and we'll speak shortly. But yeah, other than that, guys, hope you lot enjoyed. I'll see you lot in the next one. Take it easy.